Welcome, everyone, to a long overdue episode of The Everyday Trader. This is Greg Jensen from Options Animal. Glad to be with you today. Joined, as always, by my friend and partner, BRK. How are you?
What's going on? It has been way too long.
It has.
We had a lot going on, a lot of stuff happening in the markets we got to catch people up on. And we had a really awesome event in Tampa. We had a lot of our clients come down, and some were live streaming for what was an awesome event. We had David Kotok come, and that feedback was phenomenal. David's got his new book, The Fed and the Flu, which if you're interested in markets, you're interested in history, this is an incredibly well-written book. And David is a phenomenal speaker.
Yeah, it's kind of interesting how we historically at Options Animal, we have a tendency sometimes to plan these summit get-togethers that we have, and they're fantastic events. We learn a lot. We interact with a lot of very active, really smart people, very good traders with our students and our instructors. But it's just really ironic that we have a tendency to schedule these things and have these enormous market moving events that happen.
Buy puts. Whenever we have summit, buy puts.
And this one was a little bit after the actual event that happened was 3 or 4 days after summit, because we had our summit the weekend prior to, what's it called? Liberation Day? Is that what?
Libation Day.
What's that?
Libation Day.
Libation. Yeah, the
I
day
need a drink. I need
the day that we enacted all of the tariffs. And it's been really interesting, the market's volatility surrounding these tariffs. And I think the biggest reason why the volatility is there is what we've always talked about before, is that the markets I don't think the markets even care about the tariffs per se. What they care about is that there's not really a plan. The markets don't like uncertainty. And what they're seeing right now is big tariffs getting put on and then getting paused for 90 days. Except on China. Those get ratcheted up. And then China responds and ratchets up. And the unknown that this is causing, I believe, is what's causing the volatility in the market. And once we get some clarity about what those future tariffs may look like, because I don't think they're going away. I do believe this is something that the Trump administration believes in strongly, particularly with China. I've said that for a while now, that most of this move on the tariff, even the tariffs on Mexico, the tariffs on China, the tariffs on Canada, the tariffs on Europe, really were pointed at China still, because China has not obeyed and followed the tariff laws that were put in place back in Trump's first administration, his first term in office. Instead, they ship things to Thailand or to Vietnam, and that we didn't have a tariff on. And so I believe that's still really the focus of who the Trump administration is trying to rein in with these strong hard line on tariffs. But the reality is it's causing angst in the market. And so we're seeing all kinds of really interesting moves. What's your big picture thought on tariffs? Is this earth shaking, or is this going to go away, in your opinion?
Well, I'm glad I'm having this conversation with you. I really wanted to ask you what is it that you think the goal is here? What is the reason behind tariffs? I don't think we really understand. I mean, there's the reasons we've been given, but from a negotiating standpoint, I've taken multiple negotiation classes. I've been trained by experts. I'm fascinated by negotiations and human behavior and how it plays out in real life economic decisions. I'm a big fan of Kahneman and Tversky, and I think one of the best books I've ever read is Cialdini's book on persuasion, the psychology of influence, and how that works. I've also taken a 1-week Harvard negotiating class. I've been involved in multi-billion-dollar, multi-year contracts with clients from the industries that I've worked in the past. And you you don't want to show all your cards when you're negotiating, and you're some things you maybe play hardball on when that's not really what you want. And that's, I don't know that we really understand what it is that's the end game here. And we've got a president which evokes strong emotions on both sides. And I think it's important for people to try and be as dispassionate as difficult as it is. It's very difficult to not get emotional, especially if you're looking at your 401k or your retirement account and see yourself dropping 30%, wondering if you're going to be able to retire. um, those are real things that have strong emotional impacts. And even, I'm sure the hardcore MAGA hat wearing people are feeling a little bit of anger. Certainly the sentiment towards Trump has been shifting broadly. If you look at these different presidencies in terms of market response and favorability ratings, they're the worst that we've seen in any of the modern day presidents. And Trump's not oblivious to this, and I'm sure he's aware of it. So you asked the question, is it transitory? This is a guy who ran specifically on, he didn't run on some other policy on that. We've seen other presidents recently that have other sort of agenda. He ran on the economy, right? That he ran
Yeah.
on the economy and the market, and that's what he wants to try and do. Is I worked for a manufacturing company. We had some of the state of the art, the it, severe service valves. We manufactured components in Kobe, Japan, Winterthur, Switzerland, which is just outside of Zurich, and Rancho Santa Margarita, Southern California, Orange County. These are not cheap labor markets, but we had valves that if you needed it to work, you're gonna buy one of our valves. And we were making valves for the nuclear industry, for the new Westinghouse AP1000s that are being built around the world. They're the most critical valve, the most important, the power regulation valve. That's the most important valve in the plant. We made that thing. And the plant in Southern California, when Obama was president, we got bought by a British company, and there were some changes, and they said, "Listen, we can't afford the new regulations for benefits. We're shutting it down." And we took these equipment, which are the size of I mean, these pieces, these lathes and presses and these machines that were as big as a car. They went in there, they grinded the bolts off, lifted these things, put them on barges, shipped them out of Orange County. Now they're in the Czech Republic, and we went from labor rates that were $85 an hour to $15 an hour. The quality obviously was different, but that company is not coming back. Even if we say, hey, just think of what it would take to undo that whole thing, and then getting the replacement people to come back. Jobs are not coming. Alcoa had earnings this week, and said it would take us 3 to 5 years to even consider moving the smelters that we have overseas. Not to mention, so 3 to 5 years to try and relocate that. Not to mention the labor. How are we going to get the labor? How are we going to, and not to mention the power. This is an interesting one. The CEO of Alcoa said they would need the equivalent of 10 new nuclear reactors just to power those smelters to bring them back to the U.S. So nobody in their right mind thinks that that's going to happen in the next 3 to 5 years. If that is Trump's goal, we're going to feel pain for 3 to 5 years. If that's the goal, is to try and bring manufacturing back. I don't think that is the goal. We're seeing inklings. I got a friend of mine who's Moldovan, and I joke around that he's in the Moldovan mafia, and he said, "Don't joke, that's the truth." But he came back and told me he believes that what's going to happen, and Christine Lagarde said this week, that Europe is going to say, let's just do zero tariffs across the board. So anything from the U.S. to UK to the European Union, and European Union back, zero tariffs. But that's not what Trump is saying he wants to do, but that would be a hell of a win. And I've read Art of the Deal, and I'll be honest with you, I mentioned I've done a lot of negotiation training and involved. I did not like the Art of the Deal book myself. I don't think I took away a few things from it, and there's definitely a lot of ego in there. And we've got a guy who definitely has a big ego in the White House, but I think his long-term goal, I don't think we know what it is. I mean, that's just what I have to say.
No, I think I agree with you. Let me throw one piece of color, I think, at your point that's kind of going to go along the same path. And that is, I remember you and I were at a conference in Jackson. This was after COVID. This was probably maybe the first one after COVID. And then one of the partners from Bain Capital was there. And
Mm.
you remember he made the comment um, during COVID, he got summoned to the White House um, by the then Treasury Secretary. No, it wasn't Treasury, the Secretary of State, Mike Pompeo. And he was in the office with Mike Pompeo, and Pompeo said to him, "How fast can we get our semiconductor industry back to the United States?" And the guy at Bain laughed and said, "If we started today, 20 years." Um, I do believe there is some concern from a nationalist standpoint in this administration that we rely too much on foreign countries, particularly China, that I believe they do not trust that they have the U.S. best interests. And so I do believe there is some nationalist pull to pull, whether it's cash or whether it's to actually pull manufacturing away from China somewhere closer to the United States. Mexico would be a fantastic solution, to be honest. You don't have to cross the ocean. You don't have as big a cultural differences between China and the United States as you do between Mexico and the United States. That's not to say that there isn't a lot of cultural differences, but a lot of it's cultural similarities. And so, is that going to happen? Probably. I do, and you see companies like Apple making and Nvidia making comments about bringing manufacturing back here to our hemisphere. Um, still, I agree with you. It's a long process. That I don't think that's the short-term game. I believe the short-term game that Trump is doing with the tariffs is to try to help pay down debt. I believe there's an intentional attempt by the government, by our government right now, to put us into recession because we have $9.6 trillion of US debt that was all issued during COVID to save the world from COVID. It wasn't just save the United States. We saved the world from COVID by printing US Treasury bonds. You remember the Fed was in there buying $200 billion a day in the Treasury market to keep the Treasury market alive during COVID. And that was before the bazooka that came out with all of the money that was just printed. And it ended up in our debt. Our debt has skyrocketed. That is all due to, we have $9.6 trillion due to be refinanced or due to mature in this calendar year. If we don't get interest rates down, that expense that everyone's talking about, the interest rate of the current GDP to pay down debt right now, is higher than the national defense budget. We've surpassed $1 trillion a year in just interest. That number is going to get 4 or 5 times higher than that if they have to refinance all that money at 4% yield instead of the 1% yield that they sold it initially. That, I believe, is the big end game, is they're trying to refinance this debt.
Well, what's the mechanism that they're going to do it? And back in February, there were people that, we're friends with. Jim Bianco brought this up. Kotak brought this up as well, is that, in exchange for, backing off on tariffs, here's a 100-year zero coupon bond that you can roll your debt, take your 7, 10, 20-year treasuries, convert it to 100, and then we'll back off on tariffs. So, I mean, that is another way to solve
I think that's a solution, and we could see them do that. I think right now what you're seeing Trump try to do is force Powell to move. I mean, there was a lot of rhetoric this week, even of Trump being angry at Powell. And
I definitely want to talk to you
him.
about that. So, what do you think the odds are that? Well, this is a segue here. What odds, if you're a betting man, that Powell finishes his term?
Not good right now.
Less than 50%? Yeah.
I would say less than 50.
You're seeing all kinds of stuff flying around saying that the president can't fire the Fed, because Trump's not the first president to try and fire the Fed chairman. I mean, this is long-time history that we've both Republicans and Democrats have tried to fire the Fed president. But the question is, does the rule of law matter? Because I think other evidence shows that Trump seems to interpret the law a little bit differently. There's some other things going on right now where the rule of law and the Supreme Court saying this and then something else happening. Bessett said that in come October is when they were going to talk. This was, his speech. I don't know if you saw him speaking in Argentina. I think it was either Sunday or Monday. It was a really good speech, I thought. But he said we're going to start looking for a new Fed president, and we'll start interviewing in the fall, which would line up with, I think it's in the springtime or somewhere that Powell will be out. But there's did you see somebody put out that it's fake news, but somebody put out, Bianco reshared it, that Trump named Kid Rock.
I did see that. Yeah. Kid Rock as the new
Oh, let me share this just so people can see it. Where's my share screen? There you go. There you go. Donald Trump announces nomination of Kid Rock to be chairman of the board of governors of the Federal Reserve System. This was a joke, folks. This didn't actually happen.
Love it.
But definitely got some people's attention on that one. So yeah,
that it's really I want to say comical. It's sad the state that we still are in. So we're so politically divided right now still. It's interesting to me how everyone all of a sudden thinks that Scott Bessent and Howard Lutnick are idiots. It's like, these guys are brilliant, both of them.
Yeah.
I mean, Bessent was with Soros for how long? He's been in the market. He knows the bond market as well as anyone.
So Sun Tzu, The Art of War, the biggest, one of the big takeaways from Sun Tzu is don't let you are not trying to defeat your enemy. You're trying to defeat your enemy's strategy.
Yeah.
That is a key takeaway from Sun Tzu and The Art of War. And so one of the keys is don't let your enemy know your strategy. There's multiple ways to get things done, and trying to not be clear. I mean, anybody knows anything about strategy, military tactics, you don't broadcast your strategy that's going on here. And you throw out a hypothetical that, it's all about the debt. I'm not in the same camp as you, Greg, because debt has been, an issue since I was knee high to a grasshopper.
Yep.
I mean, I can remember headlines, and people freaking out about this in the 70s and the 80s. And I understand that it's not good. I don't know, but it's always been, you can go back and see headlines every decade that say that, this is the crisis, 5 to 10 years, the reserve currency, the US dollar, it's been headlines forever. What really matters is the ability to service debt. And, if we do get a pullback in GDP, if you look at GDP to debt payments, I know there's all kinds of extreme numbers and you can pick and choose, but the debt isn't as bad as it's awful, but it's not as bad as it's been in the past. If you look at it from ability to cover our debt payments. And yes, it's bigger than the military budget and it's not good.
It is now, but that's what my point is. If we don't, there's 9 trillion of it that's either going to mature or has to be refinanced this year.
So do you think Trump would trash the GDP in order to, and then make it difficult to pay? Maybe, I think the big reason for getting the 10-year treasury has been the goal, getting the 10-year treasury down. That we can take away.
Yes,
we
agree
try
with that.
Try to separate what you do know and what you don't know. I mean, I always think about this. What do I know? I wake up. What do I know? What do I know for sure? I know that Trump cares about the economy. Does he care about the stock market more than the economy? I think overall, long term, he cares about the economy. I mean, he's okay with the bear market, maybe a little bit of recession. Long term, I think we're going to be much higher. I think the market is going to be higher. The S&P 500 will be higher. I don't know what his plan is. I do know that debt is a problem. But I think there's a way past it, and I don't think he's going to tank it. The 10-year treasury, though, this is what I was going to get to. Why is that important? Is mortgage rates and cars are, financing. So the economy is tied so much to rates, 10-year treasury rate. And so if we can get the 10-year treasury down, I think this is a big part of it, is we can get home building back, we can get cars going as well, get the economy rolling there. I think that's why the big focus on the 10-year treasury. But I
I
also,
I agree with you on that.
on the as far as negotiation goes, it's you need to think of the perspective. And I can remember one negotiation deal. The most important things to us is we were looking at this multi-billion-dollar contract, and inflation rates were creeping up. And one big deal to us was terms. The customer wanted to pay us in 45 days. And it made a real difference to us. About at 1 point, 1 basis point, or 1 point, we gave it 1% interest every 30 days was sort of our rule of thumb. And we were able to negotiate with them and get them down to 15 days payment. They didn't care. They were fine with that. It wasn't a big deal to the other side. It was a huge deal to us because it made we were talking about a 6% gross margin on this project, and getting payments, that's 1% more that we could get. So that was a big deal to us. So we don't know what what do we know is a big deal? I'll tell you what people don't really understand is, you tend to be driven by the last major generational crisis. You think about what drives Germany. Debt is a bad word. It's in the Weimar Republic. What happened with Japanese? No, but not with what
Germany.
happened with Germany and their debt. This is why the Germans are so crazy about not having debt. Japan, food security. They had no food. World War II. What's the China issue? Revolution. And they've got 1.4 billion people that they need to keep employed with electricity and keep them fed. So China is going balls to the wall producing to keep people. And if we turn off tariffs, we're not going to buy those products. Those products need to go someplace else, because China will face a revolution if those people are not fed, kept in houses, and kept the lights on. That is the biggest fear of China. And so what China's trying to accomplish here is a little bit different than our goals. And we have different perspective here. And I can't put all of the pieces of the puzzle together. And I'm not going to, I think it is foolhardy to say that somebody is an idiot. You say somebody like Elon Musk is an idiot. I mean, God, he's probably one of the smartest people in the world. Just look at what he's done with Neuralink and SpaceX, and creating a new car company, and just the guy is not an idiot. Okay, you don't If you say he's an idiot, that means you don't understand his strategy. You might be the idiot. And the same thing with Donald Trump. The guy's a billionaire. He's a negotiator. And Kotak. Did you know? You knew Kotak, what his old job was?
Well, he was an advisor to, was it President Carter?
He did that, but he was also the chairman of the New Jersey Gaming Commission.
Oh, I didn't know that.
You didn't know that?
I didn't know he was in the gaming.
He has sat across the table with Trump and negotiated with Trump. He said normally Trump wouldn't show up for any of these commission briefings, but occasionally he would. And I said, what was he like? He said, well, first of all, the guy's excellent. He's very magnanimous. He makes you feel great. He listens to you. He's very personable. And David's not a Trump fan, but he can definitely see there's some positives. He says he's very charismatic. But the one thing that he would say is, we would have a negotiation with his people, with his attorneys, and we would think, okay, we're gonna work through this issue. He said when Trump came in the room, everything went out the window, and his people didn't even know what he was going to do. And I said, well, is he haphazardly shooting from the hip, or does he actually have a strategy? And I think he's shooting from the hip. I don't know. But the point is, what do I know is that I don't know what his strategy is. I do not know what the long-term goal is. Is it jobs? Is it bringing manufacturing back? That's Alcoa CEO came out and said that's 3 to 5 years. We need 10. Did I say this already? We need 10 nuclear plants. That's bringing jobs back. Alcoa is not going to come back quickly. These manufacturing companies, you drive through Youngstown, Ohio, and see these rusty old burned out buildings with weeds growing in the parking lot. Those jobs are not coming back. And by the way, if they do come back, they're going to be totally automated by robots.
Yeah. Yep.
So I know it's the economy, but I don't know what the gist is. Here's the other thing. That's zero tariffs. We do zero tariffs across the board with Europe. That's a heck of a thing. I was talking to somebody from Europe this morning in one of my sessions, and they were saying that they pay a 21% tax on anything from the United States. Um, think about that going away and what that can do to, the existing manufacturing that we do have. So I'm in
I
the
do think there's a multiple there's a multiple different things going on right now, and I want to throw out before we get too far down is I think I said the market's volatile. I'm not worried about the market breaking right now. I actually think the market is performing extremely well amongst this stress. Um, the only odd thing to me is that I would have thought with the tariff pressure, with all of the warnings that you're seeing from CEOs, that we would have seen the 10-year go down instead of up.
It
That's been
was heading down. It's since Trump got elected. If you look at the long
it,
term,
it
it was heading
was
down, and then
it was.
tariffs, and all of a sudden, boom, it spikes up.
But I would have thought it would have gone down instead of up because
Mhm.
I would have thought people would have um, expected to say, okay, well, maybe I need to go take some money out of equities, put it into bonds, thus driving yields lower
Mm.
because the price has gone up. And we've actually seen a little bit of the opposite, which is a little bit unknown. It's not
Let's just
drastic.
back up and explain to people. It's good to explain bond yields. When a bond yield goes up, what does that mean?
When a bond yield goes up, it actually means that they're selling bonds.
Right. Why do people sell things? Because they don't want them. So the demand
Yep.
for bond goes down, the yield goes up. So it's you pay the same price for the bond, and you get the same payoff for a bond. The question is, what did you pay for it? So if the
Yep.
price goes down, you see bond yields going up. You have to think reverse. That means the
Yep.
demand for bonds is going down. That means people are selling bonds. So it's the opposite. It is confusing to me because people say, well, bonds are going up. It's not bonds going up. Bond prices go up, yields go down. So if you say bonds are going up, you mean bond yields are going up. So just a little bit of clarification. I've got dyslexia, so I have to stop and think about it every single time,
Yeah,
which that means.
and again, the rationale behind that is the investor mentality of I see fear, I see a recession, I see concerns about stock prices, so I should sell my equity portfolio, my risky assets like Bitcoin, and I should buy safe assets like bonds. That's what you normal thinking would happen, which again, then all the buying of bonds causes the price of bonds to go up, which causes the yield to go down. That's what I believe Trump wants. I think he wants, and not just Trump, Besant and Lutnick, they want bond yields down so that they can refinance this debt, so they can drive more investment. That's what they want right now. That's why they're putting pressure on Fed Chair Powell to cut rates. And that's our unknown right now. Now, let me go back to, I still think we're okay. There's two things that I think you need to pay attention to in the midst of all this chaos. David mentioned one of them at Summit for those of you who were there in Tampa with us. Keep an eye on credit spreads. Keep an eye on junk yields bonds. Keep an eye on the difference. As long as the credit market is functioning, we're okay. Banks are lending to each other. There's not this fear of a liquidity crunch. I don't think that's out there. I still think there's plenty of liquidity. I still think the credit market's functioning. The other one is home prices. You brought up housing, and we want to see housing go down. And I know there was a little bit of uh, concern this week. I want to say, was it D.R. Horton that announced earnings that um, showed a decline for another year in a row of new home sales in their demand. Is it D.R. Horton? I don't remember.
Yeah, DR
Toll
Horton.
Brothers, one of the two, one of the big guys. Um, and I know there's a little bit of concern that housing is slowing, but home prices are still elevated. And I think as long as home prices stay stable, then I think you're going to see the wealth effect that comes from that keep the consumer buying things, keep them out, and the job market, right? As long as we have jobs, our homes are value, this is going to be a temporary blip in the equity market and probably a really long-term buying opportunity. Um, the question is, when is this done? I don't know when this volatility ends because I don't. We need resolution. Let's put it that way. We need a resolution of what these tariffs, the end game is going to be so that we can say, okay, let's price that into the market. Then let's focus back on how AI is going to change the world, instead of the fear of where does this trade war, what does it do to the dollar, or what it does to manufacturing. That's the concern that the market has right now. In the meantime, hallelujah for the collar trade, right?
Yeah, I wanted to share something on the bond yields. I was pulling up a couple charts here. So this is the 10-year treasury. This is the yield, right? And so since the inauguration and we started getting insight into what Trump was trying to accomplish, we saw 10-year treasuries go from 4.77 down to a low, get under 4, right? So this was what Trump wanted to see, is the 10-year treasury going down. Then we had the tariff announcements, and we've got this spike up. So 10-year treasuries. I mean, these sort of moves, seeing those in the 10-year treasuries are epic sort of moves. Seeing a 500-point basis swing in just 2 or 3 days is unheard of in the 10-year treasury. Usually those sort of moves are just epic. And if you wanted to trade this, by the way, so if you are bullish on Trump, I guess, trying to accomplish getting the yields to continue down. A good way to play this is actually IEF. So IEF is it's 77 to 10-year U.S. Treasury bonds, and this is a mirror image. These two charts, I tried to find a chart, put them together, but where you see this going, at a peak here and then coming down, that lines up with this bottom here and going up. So for those of you that are think that Trump might be able to play this off, we would see as the IEF goes up, this is the price of bonds, this is the bond yield. So as the price of bonds go up, the bond yield goes down. So if you think and it looks like there some noise here. I think the trend, since the inauguration has been for the IEF to go higher. I just wanted to throw this out as, ways to trade this. I know that's why people look at this. I think the IEF, it's something that I've actually been trading over the past few months. And I'm out of it right now, but, and I'm glad I got out of it before the tariff
So,
announcement.
so let me ask you a what if. What happens to the 10-year? What happens to the dollar? And what happens to the S&P if Trump fires Powell?
There will be an initial, the S&P 500 will probably, the 10-year treasury, I think would spike
Yep, I
and
agree.
the market will crash. People will freak out. Um, the question is, it's systemic. I mean, I'm seeing these, systemic changes, and the
I
reserve
think the
currency
only
status of the
systemic,
U.S. dollar is going to come up. I don't
let,
think that.
let me
I think
answer that for you. Or let me put my opinion before you go away from, is it systemic? I don't think so, other than because Powell's just Powell, right? He's just a man too. We've had multiple people run the Fed. The systemic change would be the insinuation that the president runs the Federal Reserve. It would be too much, in my opinion, a tie to whoever is in power in the White House is running monetary policy
I
as
said if I
well.
could take a bet that that Powell doesn't finish his term, I would bet money on that, and I think it will be initially a dramatic event in the market. People will freak out, and the
Yeah.
market will freak out. A long
And I
term.
think, and
I
I
actually
think,
think it would be terrible, actually, that if the White House gains control over the Fed. I think Fed independence is absolutely essential. And I'm a libertarian, so maybe get rid of the Fed. I'm not. I know enough that we have a system that we cannot get rid of the Fed. So that's
yeah.
little lowercase l libertarian. Um, I think the Fed does have too much control, and I think the Fed does a lot of things that it shouldn't do. But it is very important for economic stability and trying to keep rates where they are. Of course, that's a question of how good do they do. But I do think the way that our system is set up, and I do give credit to what happened during COVID to the Fed. The Fed threaded the needle during COVID, and we would have things would have been a lot worse. If we did not have the Federal Reserve around 5, 6 years ago, stepping in like it did, this could have been 1933. The Fed saved us. There's no question about it.
I actually like, and you brought up Bianco and tweeting with one of our Fed chairs yesterday. But
Austin Billsby.
yeah, I don't know if you saw Bianco's tweet about his proposal for changing how the Fed works. I actually
Did you
agree.
mute yourself? I can't hear you right now.
I don't think so. Are we still there?
Uh,
Can you hear me?
I've lost your audio. Is it my
Uh-oh.
end or your end?
I'm not sure.
I don't see your mic.
I think it's on your end.
It is moving. There you go.
Hopefully, I don't know what it was. Internet. It was a glitch in the Matrix. I actually rewatched the Matrix on the flight to Tampa.
It said your internet connection wasn't stable.
That could be a glitch in the Matrix. Anyway, Bianco came out with, and he actually threw out.
No, this was somebody not wanting you to say whatever you're about to say. So.
Maybe that's true. Maybe that's true. Bianco mentioned, and I don't necessarily disagree with this. We've had this conversation with several Fed members that there's kind of an unwritten rule in the FOMC, particularly.
Your internet connection is going again, Greg. They definitely don't want you to say whatever you're saying. Oh my goodness. Let me pause the recording here and we'll see if we can get this figured out. Where's the... All right. So the Federal Reserve does not want Greg Jensen to speak right now, but go ahead, Greg.
Okay, I'm going to try one more time. If it doesn't work, let's go over to Rumble and do it right.
Okay.
Okay. So the comments were, and we've had conversations with Fed members about how their voting practices go, particularly vice presidents, not necessarily the individual presidents of the individual banks, but people who are voting members that are a vice president at the Fed are
governors, you mean?
Yeah, governors. So unwritten rules that say I have to vote along with the Fed chair.
Yep.
Yep. If those rules are kind of abandoned and it's treated more like the Supreme Court and say, you know what, I can vote however I feel I vote, and it won't necessarily be egg on the face of Fed Chair Powell if I vote against him, because that's how it's viewed right now. Especially, again, the governors. If they vote against the chairman, they're kind of being, again, unwritten rule of they're not supposed to do that. They're supposed to all be in line.
You're supposed to walk down the hall, sit in Jay's office, and work it out. If you don't agree with them,
yep,
you're supposed to work it out before it goes to a vote.
But if we can give all of that autonomy then to the voters and say, you don't have to agree. Let's come and vote and have it be like the Supreme Court and be okay with 5-4 decisions or 7-5 decisions or whatever it ends up being, and take that away, that might actually alleviate some of the pressure of how much importance is put on who the actual chairman is of the Federal Reserve. Let the president choose him, but let the Philadelphia Fed president vote against him and not be a pariah for it.
Waller was put on the board of governors by Trump.
Yeah.
I mean, I don't know, are there empty seats in the right now?
I think there is still one empty seat on of the governors. Let me see real quick.
So, I mean, Waller was put in, and the intention, he says, this is your replacement. So, has a vacancy on the position, the vice chair for supervision. Michael Barr stepped down.
Yeah.
So there is a slot. Now this is the vice president of supervision, but also does vote on the board of governors. So they do both. So yeah, this year voting members, by the way, are John Williams, Collins, Goolsbee, Musalem, Alberto Musalem from St. Louis, and then Jeff Schmidt from Kansas City. Why does Missouri get 2 Federal Reserves? That's an interesting. Why the state of Missouri?
Yeah, I know that is true.
Federal Reserve's offices. What's up with Missouri?
When the Fed was created back at the turn of the last century, Missouri was the new center of the country, right?
Yeah, I think there's something like that. But the board of governors is Powell, Jefferson, Bowman, Cook, Kugler, Waller, and Michael Barr. And so Michael Barr stepped down. So there is a slot. So Trump has the ability to put somebody in there. Waller's already there as a Trump appointee. Um, I think, I don't know. We'll see how that's going to play out. But there's been a lot of rumblings about firing Jay. But I mean, Powell had a speech this week and then quoted one of my favorite movies, of course, is Ferris Bueller's Day Off. Things move fast, right?
Things move fast.
I think, well, Chatham House rules here. I've been told by somebody from the Fed that Jay's not going to finish his term. But now that Trump's in office and telling him, maybe things have changed. This was over a year ago that somebody told me this. A Fed member that Jay wanted to retire, and he was going to wait until after the election, but now, maybe just he's decided differently, and things do change. Things move fast, as Jay said, so things do move fast. But yeah, and what's happening right now, of course, with tariffs is inflation going up. So my bet that the next Fed action, right, is the Fed needs to raise rates. That's back on the table. You're starting to see headlines on that. Starting to see news that could actually happen. If inflation goes back up, that's what the Fed has to do. And the odds of a rate cut are slipping away. We're seeing dramatic moves over the past week. And when the economic data starts rolling in, and the Fed's going to have a tough decision. I mean, we're not going to be cutting. Too late, Jerome Powell. You saw his tweet, right?
Yeah.
Trump's tweet. So I think cutting rates right now would be, in the face of inflation. But then again, so this goes to we don't know what Trump has to know that what he's doing right now is going to raise inflation. So does this mean he's going to undo it, or does he just deny it? I don't know.
I think, again,
I don't know.
I don't either. I think what their hope is, again, maybe my understanding is, I think their hope is they send us into a mild recession, that the recession itself helps alleviate the inflation problem that's going to come from the tariffs. But it's a mild enough recession that they can pull out of it, lower interest rates enough, refinance all their debt that they need to, and then pull back out and put the pedal to the metal second half of the year.
Now I'm in the camp that the goal is to unite all of our allies in Europe and Latin America and the rest of Asia to gang up against China, to try and get lower tariffs. That's the camp that I'm in. I mean, I hear you on this, but I'm not completely sold. But I don't think either one of us know what the real strategy is.
No, I don't think so either. But
just think about what would happen if we went to the EU and said no more tariffs for either party. That would be an incredible boon for the government and a huge win. I mean, for the United States, and a huge win for Trump. That could be the agenda. That's the camp that I'm in. Again, we don't know, so we'll have to let those cards play out. But you got more time, Greg? Because I want to talk about more stuff.
I do. I got about 15 more minutes, and then I got to run.
15 more minutes. Time to make the donuts, huh?
Yeah.
No. Oh, you're not doing that now. Right? By the way, I've got back into making sourdough again. I let my starter go, so I got a starter from a friend. I should have asked you to bring a starter out for me. I don't know if your wife would share it, but
oh, she absolutely would. She keeps telling me that I need to be. I'm going to take the blame. I'm supposed to have shipped you bread and starter for a long time now. It's in the mail.
I don't even want to talk to you about it. I question if you're my friend.
Check's in the mail.
I want the checks in the mail. I want that jalapeno cheddar. For
the bread's in the mail.
What's the website? Do you have a website? What is it?
We actually don't have our website up yet. Go to social media and find us. We do all of our marketing on either Facebook or Instagram. And it's Teton Sourdough.
Yeah, everybody here needs to go follow Teton Sourdough Company.
We actually really are working on creating our delivery opportunity. Heather has found a way. Heather's my wife, by the way. She's found a way to freeze the bread that's a little bit undercooked, and so you pull it out and are able to then refresh it. It will ship it frozen. It'll show up. You pull it out. There'll be instructions of how to put it in the oven, and it'll cook up just perfect.
What
We've
was this
tested it several
today?
times.
What kind of bread was that? Looks like some sort of
Uh,
herb bread.
it
That's
was
not the
herb.
jalapeno cheddar.
That's not the jalapeno cheddar.
So yeah, I'm sorry you had tragedy in your family.
We
My
did.
condolences for that.
My wife's father passed away a couple weeks ago. We had his funeral last week, and
How do those biscuits and gravy
that's
sound?
one of the best things she makes, by the way. Those biscuits and gravy are unbelievable.
So listen, if you're in Rexburg, Idaho, you have to go to Teton Sourdough Company.
If
This
you come
is
up to
crunch.
visit either
Jackson
Jackson
Hole.
Hole or Yellowstone National Park, I'm right by both of those. So yeah, come see us. It'll be fun.
Yeah.
We can
So
talk. We can sit in the front and I'll give you some soup and bread and we'll sit and talk the market.
that'd be fun. Anywho, I want to talk about one of the most significant technical signals that we've had in a while, and this is the so-called death cross. So when the 50-day simple moving average crosses below the 200-day simple moving average, which is what just happened yesterday.
Yeah.
This is the S&P 500. We had it in NASDAQ a couple days ago. So the charts looks fairly similar. This is um, what is known as the death cross, as opposed to when the 50 is the blue line, the 200-day is the red line. When it crosses above, that's the golden cross. So
Golden
death
cross.
cross, obviously not a good thing. Do you have thoughts, reactions to this? Is it a harbinger of doom or what?
And it's almost in many ways it's one of those self-fulfilling prophecies.
Mm.
It's again the prophecy, the prediction is when they cross, they have a direction then, right? And this chart is a perfect example of you see three crosses prior to the one that just happened now in the last 2, 3 years. I guess this is a 5-year chart.
Yeah.
So the first cross was back in 20 after COVID. That was a golden cross and we had an epic bullish move for a couple of years. Then we had a death cross in early 2022, which then preceded a bearish correction of about 20 some percent. And then we had another golden cross in the beginning of 2023, which precipitated this huge bullish move we've had. Now we're having a death cross. I personally don't think it means anything. Oh, there you zoomed out a little bit further, got a couple
I'm
more.
going to go 10 years because your point is valid. I mean, this is when technical analysis, I tend to poo-poo technical analysis because just about any outcome, it's like reading a horoscope. Technicians drive me crazy because they're almost like, two-handed economists. Remember Nixon saying he wanted a one-handed economist because it was always on the other hand. Technicians are the same way. Is because oh, it's a bearish trend, but no, it's overbought, so it's bullish. So is it bullish or bearish? In hindsight, everything's very clear. But I do think for technical analysis, it does make sense to go back and look in time. And these death crosses are things that we haven't had many of. And this is going back 10 years now.
Yeah, and
And
there's only three more crosses there,
we
uh,
had a death cross here,
which
which
was not a good signal.
right,
Right.
is because you were at the bottom by the time we got the cross. So there was a
Yep.
golden cross, and that was a valid one. And here's the
Yep.
second one. This one occurred after. This is the COVID crash, right? So
Yep.
the death cross, and I remember, this happening at this time, thinking, "Oh my gosh, this is 1933." And then we got a bullish one that was a valid signal, and then here they weren't. And if we go back even further, and this is a daily chart. This is going back to 2008. We did get a valid bearish cross here, a valid bullish one here, but we got false signals here, or what technicians call head fakes. So another head fake here, another head fake here, another head fake here, another Fed fake here, I'm sorry, head fake, not Fed fake, head fake. So this is what technicians. I learned this when I was sitting in a very famous technical analyst, and he talked about his signals, and I said, "Well, pull up a chart on Apple." And so your signal said, "What about the? Oh, that's a head fake, like head fake. What?" So I guess that's I mean, in football, I know what a head fake is. Just, you carrying the ball, you do one of these and you jig and go the other way. I didn't know the stock market was smart enough to do that. But if I go back and look at, there's a bunch of these signals, most of them were not valid signals. This one was valid, but these other ones weren't. And what distinguishes between this being a valid bear signal and not being a valid signal?
So yeah, that's the biggest question, because to me, every one of those head fakes in 2011, in 2015,
Yeah, go with
in
it. Yeah.
2018
Yeah.
were all changes in the market that were not a fundamental change in the economy.
Bingo. They were shocks.
They were exactly.
They were economic short-term shocks.
It was China
Even COVID caught
devaluing its currency. It
as a
was
right.
it was the S&P getting downgraded by
Right.
I guess the S&P downgrading our US debt.
Fitch and Moody's or Fitch,
Yep, it was getting our debt downgraded in 2011.
Fitch and the
All
Standard and
those
Poor's. Yeah.
didn't
Moody's has it
change
downgrade.
the underlying fundamental economy. Now, COVID would have been a valid signal had we not responded with the bazooka that we responded, because that would have been a huge fundamental shift in the economy.
Yeah.
Um,
Anybody here bashes the Fed, by the way, or you hear anybody bashing the Fed, ask them, have you ever sat down and talked with a Fed member and asked them about, these things? Your perspective will change.
yeah. Now,
Greg and I have
2022,
many times. I believe the Fed saved us in COVID. We owe a huge debt of gratitude. And by the way, if this book, I highly recommend reading this book if you're interested in what we're talking about here. David Kotok's Fed and the Flu. Anyways, we'll talk more about that later. We should bring David on here to talk about it.
So the question you have to ask is, with this one that's going on right now,
Yep.
has the fundamental economy changed?
That's the question, Greg. That is exactly the question.
And I don't know, to be honest, I don't know. It's going to be, it still remains to be seen in my book of what and how countries and the GDP and the economy respond to these tariffs. How long because could it be a fundamental shift? Absolutely. If they don't get just pulled, you've said this before, this is a self-inflicted wound that we're doing right now with these tariffs, which is absolutely true. But are we going to stop? What's Europe's response going to be? What's China's response going to be? Is this going to drastically slow down global growth? I don't know. Maybe not. And so to me, I'm going to wait and see how the rest of this year plays out. What I do believe the remainder of this year, at least the rest of this summer, is going to have is we're going to have a lot more volatility.
Definitely.
It could be to the downside. It could be to the upside.
If you look at the levels of historical volatility that we have, you have to, I mean, COVID, we had this level, and then great financial crisis. We've only in the past, 2 decades or 3 decades now, we've only had 2 periods where we've had bigger historical volatility. Now, historical volatility is the volatility you see in the stock, not to be confused with the VIX. The VIX is looking forward. Historical volatility looks back. So I agree with you that we're going to see more volatility going forward. But I wanted to introduce another concept. So the question is, I'm in the camp that what's happening here is self-induced and therefore it could be turned off. But it begs the question, I'm going to throw a big word out for people, is hysteresis, which not to be confused with hysteria, but maybe you might. Anybody who's electrical engineer is familiar with this term, and that is essentially it's used in economics too, and that is that the way up is not necessarily the way down, or the way down is not necessarily the same. When you turn something off, it doesn't come back the same way. That's what this hysteresis term, it's an interesting term. So the question is, I think the switch will get flipped, and the question is, will we be able to return back to the trend, the long-term trend? I'm in the camp that I think we will. I think we will see this thing get turned off, and that we get back up, and where the long-term trend is somewhere up in here. Now, 5 to 10 years, I think we're going to be back up here. The question is, how quickly does it get turned around? I don't think we're going to quickly recover as as people would hope. I don't think we're going to get back up to this, six. This is the SPY, not the SPX, but getting back above 6,000. Are we going to get there in the next 3 to 6 months? I would hope so, but probably not.
Yeah, I'm long term. I've said this a few times in some of my daily market updates with Options Animal and OA Weeklies since these tariffs started in the last 3 weeks. I'm of the opinion that this is medicine for us as an economy that we need to take. It means in the short term there might be some pain, but I think in the long term it's something we need to do. Um, so I do agree that long term, this is actually going to make us healthier. In the short term, I don't know where the market's going. I think that gold is a pretty good indication that there's a lot of fear still in the market, that we're seeing gold at all-time highs. I know our friend Guyed has just called for gold that he thinks it's at a top and it's the next thing to crash. He may be right. It's had quite a meteoric run for gold. A 50% move in gold in a year is unheard of. And we just got that in the last year. So I think in the short term, I like this idea of history. I think we can get back there. Why do I say that? You saw the
Well,
response.
that's the hysteresis. You eventually get back, but just not as quickly as you
Yeah,
came down.
I think we do get back there because you saw the response
Mm.
that
Right.
the market had just
Right.
last week
Right. Right.
when they were just paused for 90 days. We were
By
up
the way,
10% in a day on the S&P. That's an unbelievable bullish move. I
the
guarantee
biggest,
there were a lot of people in pain that day.
but don't the biggest up days we've ever had in history have always happened in the middle of bear markets.
Yeah.
If you go
Yeah.
back in history and look at the biggest up days, that's so having Trump's tooting, hey, the biggest day that we've ever had. Yeah, that always happens in the middle of bear market. So
Yeah.
uh,
I think the path right now is to the downside still. But I'm hoping to bottom sometime in the summer and that we can end the year on a positive note and get some clarity on what these tariffs mean, what it means to global GDP, what it means to individual company earnings. These earnings are going to be a mess this quarter. We got the bank earnings so far, and of course Goldman's going to make more money in the last quarter. Of course JP Morgan's going to. They're trading houses. They made a ton of money trading this last quarter. It will be interesting to see as we get further and further into earnings this quarter, how many CEOs are willing to forecast any type of guidance about future earnings. I don't know, but I do know that this is the type of market that you don't want to hide from. This is the type of market that creates generational wealth if you understand how to manage risk and take advantage of opportunities that get created. So
I had a couple other charts. Hopefully, you got time here, but
yeah,
these are the 50 top days that we've had, going back since the recovery in 2009, and the 50 best days that we've ever had are in the worst, shittiest markets we've ever
yeah,
had. So look at this cluster of these are the best days. The top 50 best days that we've had have been in the midst of the bear market. So having a really good day, while it makes everybody happy, that doesn't mean the worst of it is over. That's one thing I wanted to share. The other one is I wanted to talk about, and I shared this with the options animal community yesterday, and this chart is from Jeff Weniger, who's he's with Wisdom Tree with our friend Jeremy, CEO of Jeremy. By the way, Sam is working there now as the chief
I
economist.
saw that. I saw Sam's working at Wisdom Tree.
Sam, this is talking about Sam Rhines. He's one of our favorite people. Very, very smart guy. Sees things a lot different. Anyways, Jeff posted this. This is a sentiment indicator of the VIX, American Association of Individual Investors, bears. They do are you bearish, bullish, or neutral? And then the investor intelligence, do you expect a correction? So this is an index summing these up, scaled. And if you look back, we've had 12 periods when we've been higher than where we are from a sentiment standpoint. 11 of those times, it has been a phenomenally good time to buy. This is where we are right now, ladies and gentlemen. And being down 6.6 from here, I would take it. It's a buying opportunity right now. I'm telling you, folks, I am very bullish right now. I do think we're going to get through this. I am not in the camp that this is an end. By the way, this is the sort of stuff we literally talk about every single day for members of Options Animal. Every day we talk about market reviews and looking at real opportunities here. So I think there's some real opportunities in how you want to play this out. I am bullish on manufacturing too. And we talked about how difficult it would be to bring back some manufacturing, but other manufacturing could come back even easier. If you think about like automobiles, the ability to scale existing infrastructure where we're making cars now, that can go fast. Pharmaceuticals is something that could come back pretty quickly. There's the chip acts that we're seeing some headway there. I think that's going to take a little bit longer. But another space where we could see, and that is defense. And one particular name that I wanted to mention for people, if you're looking for trading ideas, is keep an eye on shipbuilders. This was the story post World War II of why the economy did so well. There's a couple names that I think are worth taking a look at and putting them on your radar here. And one of them is Huntington Ingalls. This is now the Newport News shipbuilding. We've seen some bump ups here, pullback after the election, but shipbuilding was very, very important because it actually spawned other industries because we created skilled labor, welders that were able to go out and build, factories and power plants and nuclear plants. Another name that I like in here is BWXT. And by the way, when I was having dinner with Kotak before our summit, he was saying that he's bullish on the U.S. defense sector. There's other names that are out there. These are two that I just thought of that you look at a company that's just bouncing off a 52-week low, BWXT with another shipbuilder manufacturer. They make the propulsion systems for the nuclear navy. These are a couple of ideas that I had to share with people that to trickle in. And as you mentioned, the collar trade is the trade to go. This is everybody here owns homeowners insurance. You have life insurance. Why don't you insure your stock? The approach that we talk about with a collar trade is essentially being a real estate investor who buys an asset, buys insurance on your asset, and then you rent out your asset. Using the combination of these, you can literally take advantage of any trend. Not every collar trade takes advantage of every trend. You got to pick the right trend, but you can make money with the stock literally make money with owning the stock and stock going down in the right collar trade. You can make money in stagnant trends. You can make money with changes in volatility. You can make money with time or stock price movement, and then have defined risk and know you can't lose a certain amount of money. It will let you sleep at night. Yep. This is why I sleep at night, because you don't worry about your house burning down or tornado comes through or you get bad weather. You think, oh my God. I mean, yes, you worry about your health and your personal safety, but your asset is going to be protected. I don't understand why more people don't protect their assets, their financial assets. Actually, I do understand. It's because you don't know. You're not educated. And more people don't do it, but I'm telling you, there are many high net worth investors who do understand this and appreciate it. And it's not the sort of thing that everybody talks about. It's, we're a unique community here. And those of you listening to us, a good number of you understand exactly what we're talking about. And you're smiling, you're grinning right now because these markets that we're having right now are great opportunities. This is the best time. And you're potentially missing opportunities if you're not aware of what's going on in the bigger picture here and you don't have the right strategies. That was a little bit of a sales pitch.
I feel like saying amen.
A little bit of a sales pitch for what has changed my life is what I learned through Options Animal, being able to, my wife retired in December. So yeah. I'm only 60 years old. I would not have been able to do it without knowing what I know.
You're not 60, you're 48. I thought you were 48.
I feel 48. I'm actually better than the 48 version of me. You've known me for 20 years. You knew me when I was 75 pounds heavier and not as healthy. So life is only getting better for me, and I'm happy and loving life. So,
all right, my friend, let's wrap up.
Did you have any stock picks? Do you have anything to throw something out here?
I'm fishing right now with Micron. Micron in the 60s. Yeah, I know they've got a lot of exposure to the semiconductor space. Oof. This is a stock that's been absolutely decimated. I know their cash flow is solid. So this is a stock to me that's a screaming buy right now.
This is where the technicians would, draw a channel and maybe be doing iron condors, and then, oh no, that was a head fake.
Whoops. Yeah, head fake.
Yeah, head
Ouch.
fake.
$25 later.
Great.
Yeah, Micron's definitely a name I'm gonna be loading back into.
Oh, I can think of a dozen ways. Oh, I can think of two or three great ways to trade this.
Yeah, yeah. So Micron's probably at the top of my list right
I
now.
like the idea of a Costanza trade or a bull put here, and maybe even an iron condor. Actually,
Yeah,
it's a very out of the box approach on an iron condor because that trade you actually want to go against you.
I
Uh,
actually think the
do
one
an
that
iron condor that you want it to break because you know how to fix it. I think that's a hell of a strategy here because maybe we're in a new trend. Your iron condor works. If it goes up, you buy the stock. If it goes down, you get a sign. You call or trade it. It's a win-win no matter what happens if you know how to manage those strategies.
I think the Mag 7 is still big risk right now, not because I think they're not making money, but I do believe that those stocks are the ones that are um, still the winners, even though they've had a bad year so far, most of them. If you look at a 3-year chart, um, is there a 3-year you can put in there?
I
Maybe
can go
not.
1 year.
Well, even 1 year, you can see only Microsoft and Amazon are real losers on the year. You've still got Nvidia and Apple up, Broadcom up really big over a year performance, and a 3 years even bigger. So yeah, and Tesla's up 50%.
Yeah,
I still think there's a lot of risk in Apple, particularly of all of those.
man, and
That
they missed the mark with Steve Jobs needs to rise from the grave.
Yeah. So I'm concerned about the Mag 7 still being the winners that everyone's going to have to sell if we have another downturn in the market over the next couple of weeks to couple of months. They're going to have to sell the Mag 7 to meet margin calls.
I'm still bullish on the utility sector. I did a nice trade on First Energy this week that's done very, very well. So
I think Berkshire Hathaway is another name that I really like right here.
yeah, you can't go wrong. Uncle Warren. By the way, in a few weeks, I'll be in Omaha hanging out with Uncle Warren.
Nice.
His cardboard cutout, but I'll be at the Berkshire Hathaway meeting. He said he's going to hold. He wants to talk about the economy and tariffs, but he's waiting for the meeting, so it'll be a pretty exciting one. Well, we'll see.
Yeah, we'll see.
Interesting. Well, this went longer, so we made up for the missing several episodes here, folks. We apologize for the long hiatus, but hopefully you got through this and it was worth it for you. We look forward to seeing you. It was really good to see those of you that came to Tampa and those of you that couldn't make it. We're online. We sincerely appreciate our community. Like, subscribe, and share.
Thanks, Eric. We'll
Buttons
see you.
down below. Anything else to leave us with, Greg? I'll let you say goodbye.
Nope. Thanks, everybody. See you at the next one.